Is comfort the enemy of profit when it comes to property investment? Let's find out, shall we? I'm Tim Graham, and the Property Playbook starts now. Many investors make the mistake of investing all their money in a single type of property, but real success comes from smart diversification. To unpack what all of this really means, I'm joined by our good friend of the show, Michael Wilkins, Managing Director of the National Investment Advisory, Nuestar. Michael, welcome back to the program. How are you?
Thanks, Tim. I'm really well. Thank you. Thanks for having me again.
It's great to have you again. Let's start by, anybody who hasn't seen your episodes in the past, let's start by talking about exactly what Nuestar does.
Yeah. Nuestar is a wealth business and it specialises in property. We're a national-based business, so we look at diversified property assets across the country, and we do that for a lot of clients who are looking for tax efficiency, how to compound their equity, and really how to grow their property portfolio over time. A lot of our clients are busy, so we help them with all those things.
That's all right. Okay, so obviously diversification can be in different types of assets. It could be going from a house and land package or an apartment to townhouses and things like that. But I understand you're doing a bit more in the industrial space as well now.
Yeah, I think like with any assets, whether it's property or shares, diversification is a pretty key part. Yeah. And one of the things we specialise in is not just only apartments or townhouses. We do house and land, and we also recently, in the last 12 months, looking at industrial. So we've got some great industrial products that we've been rolling out in Queensland, and we've got more to come in Victoria in the coming months.
It's a bit of a progression for a lot of investors. They sort of start with a typical residential investment property, and then as they start to grow a bit of a portfolio, they're looking for something a bit better in terms of yield and things like that. What are you sort of seeing in that sort of growth of people's asset classes that are moving into these types of investments?
Yeah, I think when people start, the best thing you can do is work with what you've got at the time. So you've either got some savings or you've got some good borrowing capacity, and you really want to try and do something that doesn't stretch you too far, but you want to get a good asset and get that asset working for you. And then it's about getting reviewed and then looking at what's next, and that what next could be an industrial asset. And if it is, you need explanation around how it works. It's very different to residential and how it's structured.
So obviously the commercial space, you've got so many different types of assets within that. Why industrial?
We like industrial because I think right now, like especially post COVID, there's been a lot of businesses that require storage facilities. People are different types of tech, especially tech businesses, and so you can see all these sort of nodes of this industrial, smart stores pop up in different areas. So we focus on transport-based areas, population, infrastructure, employment, and we look for industrial assets that are on these corridors, and we assess them, and we go in and we take a piece in that in investment space, because there is a lot of owner-occupiers that come in there, they put it in their super funds, but we're there for a longer term, bit more cash flow positive side for an investment, and it does have a bit higher yield, and a lot of the tenants, as some people don't understand, they pay most of the costs.
Yeah, so the outgoings are covered by the people utilising the property.
Yeah, in most of the industrial assets, it's exactly right, so very different to residential, so it's a good one to have in your portfolio.
Yeah, right. So tell me, in terms of trying to acquire an industrial asset, are we still looking at sort of 70% LVR? What sort of rates can we be getting there as well?
That's a great question, Tim, and I think two things. LVR is a big point. We always recommend putting 30% or 70% LVR, but there are products out there now that will allow you to go to 80%, and even some cases, depending on your investment portfolio, you can actually go out to 100% on commercial now, and we've got some of the lending packages out there available for that, but it comes down to specific person and also how they're funding it, and whether it's in their personal name, could be in a trust, or even self-managed super fund, which is what on the top of everyone's lips at the moment.
So, I mean, there's different ways that you sort of service a loan these days as well, and a lot of people that have sort of grown their residential portfolio over the last few years might be finding in that higher interest rate environment that they've sort of tapped out in terms of being able to borrow again. Am I right in saying that with these types of assets, a lot of the time you can actually get like lease stock loans, so they actually lend based on the tenancy?
Yeah, absolutely. So the tenancy-based loans really does help, and especially around when you're going in the self-managed super fund, if you've got a balance in there, they look at your your credibility in your file, but it doesn't necessarily affect your borrowing capacity outside your super. So that's one of the really important parts of it, and that's why we always look at a strategy in the property side. Is we make sure that you go and have a look at inside, and then we go in outside super as well, because they are very different strategies, and people don't quite understand this process. And you also don't have to use all your super. You can take some of it out, roll it over, but also, you know, you need to see an accountant, you need to get financial advice, and you need to, you know, excellent broker, you know, and that's at Nuestar, we put that team around you.
Yeah, right. Okay. So obviously, when it comes to you know, residential real estate, for us, we're sort of looking at, you know, what infrastructure that's around there. We're looking at, you know, local jobs and all these different things that are important for residential housing. What's the sort of process for you guys to select the right location to buy one of these assets? Yeah,
absolutely. And I think, as you know, we work with Terry Ryder from Hotspotting really closely, and we get him to go out and look at the data sets for us. We find areas that are gentrifying. We work in new areas. We try and be first. In the property cycle, being first gives you that best opportunity for the maximum amount of growth. So we're always looking at that. We're looking at a project right now in Wollongong. It's going to be the first master planned apartment project in Wollongong. You know, Terry's provided us with some baseline research, and that gives us the good understanding of what's going to happen in the area, what's the employment like, what's the population like, what's the future supply like. And so they're the types of things we look at before we go and do our full due diligence on the asset, and then, you know, recommend that to our clients.
Okay. So you mentioned that there's some pockets throughout Queensland that you're doing it, and then you're going to be looking at some opportunities in Victoria. Why those two locations in particular?
I think right now there's different speeds in every state. You know, whether it's Perth, Adelaide, Melbourne, Sydney, Brisbane, we've got assets right now in all of those states. But I think right now in Queensland, you've got this Olympic energy up there right now. You can feel it in Brisbane, and so we know there's a shortage of supply. The costs have gone up for construction, so it's really about trying to find those right located projects, and so in residential right now, it's really important to make sure you choose the right project in there. And then in Victoria, we're looking at different types of assets. So we've done a lot of house and land in Victoria, and now we're switching and having a look at in industrial, especially in some of the more built up areas in the belts there, because there's certain demands out there, for that product.
Okay. Well, obviously Victoria-wise, we've got higher land taxes and higher stamp duty and things like that, but our rental yields have traditionally been pretty poor. So there's obviously a really big opportunity here to be getting higher yields once you start to step into the commercial space.
Yeah, absolutely. And I think the due diligence around that commercial space is definitely around the developer, who the builder is, how they're funded, when they're going to complete, what does a tenant going to look like, what does a lease look like, can you lock in the 3 years? Well, there's lots of complexities around it, so we really unpack all that and then package it up for the client. So when they come in and we put an industrial product in front of them, all that hard work's done, and it's about really them coming onto the journey and then looking at that 10-year time frame for the asset to do its work for you.
Okay. And obviously, just quickly circling back to Brisbane, we've obviously seen with the Olympic, we've had the Olympics on the radar for a long time, but we're really only just starting to see where the money for the Olympics is actually going to get spent. So, is there something that you're following in terms of where that money's going?
Oh, I mean, absolutely. I mean, there's projects, especially council-based projects now that we've been sitting and stalling. Tunnels on the north side of Brisbane. The big ones, obviously, Victoria Park. Where the main stadium's going to go. There's now talk. Well done to the Brisbane Broncos for winning, but there's now talk of the Suncorp Stadium getting a cash injection. So I think when these things are coming, I can understand some people are a bit hesitant about the Olympics, but it's a big transport play.
Well, it's not just all going into sporting things, but it's a road, rail, it's hospitals, all sorts of things.
It is definitely bringing infrastructure forward, definitely that's needed in Brisbane. Between the corridors of Brisbane, Gold Coast, Sunshine Coast, there's some rail upgrades happening there. There's bus upgrades on the north side. They're now talking about different modes of transport on the Brisbane River that they've been thinking about. They're now going, let's get this going. So I think it's exciting, and what that needs is they need population near these transit nodes, and that's what we look for.
Okay. Changing pace a little bit, so we've talked about the things that you do to help people actually buy this, but what have you seen in terms of common mistakes when people try to do this themselves, specifically in the commercial and industrial space?
Yeah, look, I think buying property on your own is quite difficult. Everyone scouts through realestate.com or Domain and has a look, and you're with the whole market, and it's really hard to do. How do you do your due diligence? It's actually quite difficult. So it's building a team around you, and I think some of the mistakes people make is they don't quite understand understand, you need a really good team around you.
Yeah, that's right.
And having a really good broker and a good accountant and a good solicitor and a good property manager, all things that if you're looking for an investment, you need around you. And I think people get in there and they go and buy something and they go, oh, hang on, I've just bought this. Have I got the right loan structure? Oh, gee, I don't. Am I putting it in the right name? Oh, I didn't understand that. I didn't know how to find a property manager, and it can become quite daunting.
Yeah, overwhelming. Absolutely.
Yeah, overwhelming.
I mean, at the best of times with residential, it can be like that. Stepping into a space like commercial could be very daunting for a lot of people.
So, like in Nuestar, we lead. The property comes last, not first. And it's sometimes that people ask us that question. Why is that? It's get your structure right first, get your team around you right first, and that will help you mitigate the mistakes.
So how exactly would you work out, whether or not commercial investments are right for this particular customer or not? What's the process?
So we go through a strategy process, and that strategy process basically washes the client and finds out what their capabilities are. We look at incomes, we look at their savings, they might have some equity, risk appetite, those types of things. And then once that comes in, you then have a baseline. You've spoken to the broker and the accountant, you've got some structures and they can come back and brief in and go, right, this is what we really think you can do. And then from there, that's where we can really do our best work, is we've got the team around you and start working out which property will work on their budgets and what their risk appetite is. And that might be residential, it might be house and land, it could be a single part contract, it could be two part. So they're the types of things we do, and you present them to clients, and then they start understanding, wow, I can do this, and you put them in a sort of a Gantt chart for 10 years.
Yeah, right.
And they start getting a bit excited that, hey, I can actually get some assets, get some income, get some equity, and start that journey while they're still, working and earning income.
Terrific. Well, finally, if somebody did want to explore this, how do they get in contact with you? Yeah,
it's just easy. On our website, nuestar.com.au, you can hit us up there at info@nuestar.com.au. There's a little chat box there, you type it in, or you can always email myself, michael@nuestar.com.au.
Terrific. Thank you very much, Michael.
Excellent.
Great to have you again.
Thanks, Tim.
Well, folks, that's the play for today. This program's been brought to you by hotspotting.com.au. This is Ticker. We'll be right back.